Let's move on quickly into awareness. We've got a lot to discuss tonight on that. In Kenya, Equity Group, the country's largest banking services, today hosted investors to a forum in Nairobi. The meeting was held to brief investors on the bank's financials in the first half of this year, as well as the key operational performance in the period under review. Now let's take excerpts from that briefing led by Dr. James Mwangi, the Group Managing Director and CEO.
If you look at the previous slide, look at what has happened to shareholders' funds. We're now nearly 300 billion. We're now above $2 billion in capital. Why? Because the buffer we had created to take care of mark-to-market, which had almost reached 90 billion, has now been released. And this you can see, if you have a capital of 300 billion, 25% of 300 billion, you have almost a single lending obliga of 75 billion. Equity now can go to development space. And that explains why we are leading the world in the campaign, a global leader in the campaign of private sector-led development financing, because we now have the capability, we have the comfort. When you have a single lending obliga of 75 billion, and given that we decided to develop the Africa Recovery and Resilience Plan, or the African Marshall-like plan, in a collaborative way with IFC, with IMF, with the UN, with 24 development banks, then that capability to syndicate for the development of Africa. I'm very excited, and I'll give Joy a moment or two to tell you a little bit about the influence we have had in Seville to develop the concept. And I'm glad we are about to release a white paper on that space so that we could be able to lead the transformation of Africa through the private sector. Fund the private sector. Roads can be done by the private sector through PPPs. The government's headrooms are very narrow. The debt burden has shocked the government. And as you can see, debt repayment is now even more than the recurrent expenditure. That space, we all need to rise and say, it's not sustainable. Why don't we get the capital of the private sector to do development financing? And I take real pride that we have been able to craft that ability. So if you take it up in just one page, we see customer deposits up 2% to 1.3 trillion, total income for 6 months breached 100 billion, so almost giving us a guarantee that it will be a more than 200 billion revenue group by the end of this year. Efficiency ratios, NIMs up, cost-income ratio. I want again to talk about that number. That number is inflated. The loss that we are seeing in South Sudan, inflation, that is what is causing that cost. If you adjust for the cost of inflation, because it's factored in the cost-income ratio, we are navigating towards 48%. So we are, the trend is the right one, and we see that when you go to the individual subsidiary. Kenya, which used to operate at 56%, is down now close to 48%. So we can see the trend is right, but that number has been affected. If you look at loans up, profit up, assets up, profit after tax up, return on asset up. I can tell you, if we deal with the cost-income ratio adjustment of the number of inflation accounting, which we saw gross profit jumps from 12 to 20, cost-income ratio will be positive, return on equity will be positive. So the dashboard is all green. So the two legs, as we have said, that is inflation accounting, and you can discard it. I think let's predict the future, because I think the future is more important for investors. Investors never invest into the past. They invest into the future. They bet on a company's future. And I want to draw you to the last 3 quarters. The fourth quarter, we made a profit of 9.7 billion. The first quarter, we made 18.6 billion. The second quarter, we have made a profit of 22.9 billion shillings. Your guess is as good as mine. The transformation is complete. This is what you need to be measuring us. How long will this waterfall last? It can last as how long it will take us to move the 500 billion from government stock to ready. That's really what you need.